Hello, everyone. This is Wahed. I'm a research fellow at the Brac Institute of Governance and Development of the IGD. I welcome you all in today's webinar where we will be discussing about this new initiative that the IGD has launched. We call it WEE-DiFine. We gave it a few minutes for all the participants to join with us. I will take a few minutes before we start our webinar to give you a little bit of background, who we are, what we work on, and what is WEE-DiFine. So the IGD is a research and academic institute at Brac University in Dhaka, Bangladesh. The IGD aims to promote innovation in governance and development processes towards a just and prosperous society by influencing policy and practice through rigorous research and quality academic programs. WEE-DiFine is one of the IGD's latest research initiatives that aims to generate a comprehensive body of evidence around the impact of digital finance on women's economic empowerment, the causal mechanisms between the two through funding rigorous research and studies across sub-Saharan Africa and South Asia. There has been a developing world population in the last 2 decades, and it has fundamentally transformed society. To improve our ability to generalize research findings and advance policy recommendations, additional studies should specifically focus on better understanding the causal mechanisms that mediate impact of digital finance on women's economic empowerment. That is the pathway. Through WEE-DiFine research grants, researchers will be able to develop a deeper understanding of the causal mechanisms from which policies and product designs can be informed to increase DFS's potential in women's economic empowerment. FIW is an annual gathering of global community working to advance inclusive finance. FIW is convened by the Center for Financial Inclusion, CFI, which is an independent think tank housed at Accion. I welcome you all, our two speakers today. We have Dr. Rachel Heath, Associate Professor of Economics at the University of Washington. And we also have Dr. Munshi Sulaiman, Regional Research Lead in Africa, Brac International, and Research Advisor, Brac, with the IGD. Without further ado, I invite Rachel to begin our presentation. Rachel.
So I am Rachel Heath, and I'm an associate professor of economics at the University of Washington, and I've been a part of the WEE-DiFine initiative in collaboration with Brac, and I'm really excited to share some of the results from our white paper that we wrote to kick off the initiative. So I'll start by just defining kind of a couple key terms, namely digital financial services and women's economic empowerment. So, what are digital financial services? And, it's quite a broad concept. So both, kind of what is digital and what is financial services. So, what are financial services? So, those can be kind of any financial services access and or delivered through digital channels. So, what could that be? It could be payments, it could be, credit and borrowing, or it could be savings, maybe remittances or other transfers. And finally, we also think that, or we also, have seen examples of people accessing insurance digitally. So those are kind of, the wide range of different financial services that, could be included digitally. And then, digital means, could mean the internet, but it could mean mobile phones, automatic teller machines, point of service terminals, or any sort of smart cards that are electronically enabled. So again, kind of a wide range of products that are incorporated under this digital financial services umbrella. And then, what is women's economic empowerment? That's the focus of our, of this initiative, is what leads to women's economic empowerment. So broadly defined, women's economic empowerment is a woman's ability to enact outcomes that reflect her own preferences. So not just those of her family or those of society, but, what are her own preferences herself. The United Nations defines kind of five key components of women's empowerment. So those are the sense of self-worth, the right to have and determine choices, the right to have access to opportunities and resources, kind of financial or otherwise, the right to have power to control their own lives. And importantly, that's both within and outside of the home. And finally, kind of on a broader societal level, the ability to influence the direction of social change to create a more just social and economic order, both nationally and internationally. So, the context in which we're launching this initiative relating digital financial services to women's economic empowerment is, one important part of that context is just the rapid expansion of many of these kinds of digital financial services and new opportunities to, potentially build a more inclusive economic infrastructure. But, at the same time, there's great opportunity, but there's also important risk that, if they're not carefully designed, that it could actually, end up kind of actually inadvertently hurting women's economic empowerment. So there's a great opportunity, but also a point of, some risk as well. But, if done correctly, digital financial services have the potential to reach, all sorts of marginalized communities. So this initiative is obviously focused on women, but if we take a step back, there are kind of other communities that typically lack access to financial services that could be, brought into getting access to these services through digital means. So, that kind of unbanked population could be, is kind of an important target for the expansion of digital financial services. And so while that's happening, we've in the white paper we wrote, we think about how this digital financial services could advance women's economic empowerment through a number of different channels, some of which I'll talk about today. So, why does all of this matter? So, within development economics and related fields, there's a lot of evidence that kind of access to finance is really quite an important condition for lowering rates of poverty and for economic growth more broadly. So, in that context, there's kind of increasing use of digital financial services, but there's still persistent divides. And, in particular, in this initiative, we focus on gender divides. So women are, even as digital financial services have been expanding, women are still less likely to use them. So, but as I mentioned, there's a lot of evidence that financial inclusion can be, really quite important for not just, women, but also for their families. So given that, that these are two quite important, digital financial services is including women economic empowerment, a really important policy goal. But the backdrop of this report is that, the kind of the causal mechanisms linking digital financial services and women's economic empowerment are quite understudied. So there's, it's quite important to think about how, digital financial services might lead to women's economic empowerment, but there's quite limited evidence on what are the gender differentiated impacts of digital financial services. So I'll mention, some of the kind of the results that we have on digital financial services overall a bit later in the slideshow. But often we don't have a good sense of how those impacts might vary between men versus women. We really need more evidence on what's the effect of digital financial services on women, given that, digital financial services are quite broad, as I mentioned. So, we really need to kind of know, what kinds of products lead to women's economic empowerments and what designs might actually inadvertently hurt women. So if we kind of understand the linking digital financial services and women's economic empowerment, then it can really help us both kind of as policymakers or as designers of these products to design policies or design products in ways that can help women and foster women's economic empowerment. Okay, so I'm going to talk a little bit about these pathways that I was just arguing are quite important. Starting with a little bit of the theory linking digital financial services and women's economic empowerment. So we can kind of explore this relationship linking digital financial services and women's economic empowerment through kind of several, several different potential channels. So, one is the relationship between digital financial services and, gender disparities in financial access. So just, does, as I mentioned, does digital financial services, or do they kind of help women that otherwise wouldn't access finance, kind of help women get access? Then, the technological features that included in these digital financial services become quite important. And we, we kind of argue it's really important to investigate how those features embodied in the digitization, how those impact women's economic empowerment. So, as part of the kind of broad set of reasons why digital financial services could affect women and foster women's economic empowerment, they might also affect women's access to non-financial services as part of, they may help women access those, that more broad set of outcomes and services. So all those different kind of potential mechanisms kind of feed into two broad ways in which digital financial services can lead to women's economic empowerment that we kind of delineate in our white paper. So the first is that digital financial services can increase women's bargaining power. And with that increased bargaining power, going back to the fundamental idea of women's economic empowerment, they can use that bargaining power to bargain for things that they would like. There's another kind of important potential effect, which is that maybe a women's bargaining power doesn't go up as a result of digital financial services, but they might just allow women to enact her preferences more easily. So through things like the privacy and the ability to kind of to have private accounts, even if her bargaining power hasn't gone up. And then those kind of under those two broad sets of mechanisms, we've identified three channels through which digital financial services can achieve women's economic empowerment. So the first is by reducing gender bias in access to finance at all. So it's not about, it's maybe at the at the first level, it's not about the kind of finance, it's just about accessing finance at all. Then, conditional on getting that access, digital financial services could, do offer different features, ways to, ways to use and access that, those services, and they may have gender implications. And then finally, there may be a spillover effect of digital financial services on non-financial services. You might, use these digital financial services as ways to get, access to a more broad set of services. So we kind of put all those channels into a graphical conceptual framework that kind of summarizes the things I've been talking about. So if you start with digital financial services, there's, as I've mentioned, there are reasons why those services might have important differential effects by gender, and those feed into access to financial services, potential technology induced changes in behavior, or digital financial services. And together, all those things may either increase women's bargaining power or her ability to enact her preferences. So before I go on to think about some of the evidence of these channels, let me just kind of name some of these technology-induced channels or changes that we've thought about. So things like privacy, the opportunity cost of time, because it's it often saves time to access, it's often faster time-wise to access digital financial services. There's evidence that digital financial services allow people to more quickly and broadly get transfers to their network. So that matters for things like insurance. There are often lower transaction costs to accessing finance. There may be behavioral influences in the way that both genders access and use financial services. It may be that digital financial services hopefully lowers systematic discrimination. So if it's an environment where women are frequently excluded from credit markets in a way that might be due to either statistical or taste-based discrimination, accessing those services digitally may differentially help women. It might be, as I mentioned earlier, it might be safer to access financial services in areas where there's crime as an issue. And then finally, mobility, whether that's physical mobility or occupational mobility. Those digital financial services may help women be more mobile. So let me just conclude by saying just a bit on the current state of evidence for some of those causal pathways. So let me just start by illustrating a potential causal chain linking one particular kind of digital financial services to women's economic empowerment. So this one's focused on privacy. So in particular the particular digital financial service of mobile money. So given that you can keep that on your phone, it's likely that it's more private than physical money for the woman. That could increase her bargaining power if it makes it easier for her to hold and retain money. And we have very good evidence that increased bargaining power increases women's economic empowerment. Another potential related causal chain goes through credit access. So mobile money could also make it easier for women to get credit and have liquidity when they use money when they need it. We have good evidence in development economics that access to credit affects the occupation that people go into, and so that's accessing a higher paid occupation would also lead to women's economic empowerment. So if we're thinking about these different evidence channels, then there's more evidence, as I mentioned, on the overall effects of digital financial services than their gender differentiated effects. So to briefly tell you some of the overall effects of digital financial services. So there's evidence that they help households cope with crisis through better access to informal transfers and savings. They reduce household poverty through, through several of the channels that we mentioned, things like occupational change. They help households they help households access services by relaxing constraints of physical distance to those services and the cost of those services. We know digital financial services promote time savings. And that could matter both through the opportunity cost of time, if it was taking a lot of valuable time to access services, and also by just making the access to those services more flexible as far as time. So maybe they're not tied to a specific time when, say, a bank is open. There's evidence that digital financial services enhance women's both physical and occupational mobility. And reduce safety concerns related to having cash. And there is some evidence that they can overcome systematic discrimination, whether that's cultural or statistical, against leading to women. So there's some evidence on digital financial services and both overall and occasionally how those affect women, but we argue there's a role for much more. So the review that we've done of the causal pathways between digital financial services and women's economic empowerment does several main things. So it identifies the current state of evidence on these various causal mechanisms that I've just described, linking digital financial services and women's economic empowerment. It outlines the boundaries, how we think about conceptually digital financial services and women's economic empowerment, and conceptually why these two concepts might be linked, and then discusses the scope of evidence identified on these causal mechanisms. There's several challenges that we've identified in doing this. The first is that any kind of treatment effects linking, of digital financial services, and particularly how it links to women's economic empowerment, the effects could be quite heterogeneous. So that requires kind of both thinking through what that heterogeneity might be and making sure that that experiments are large and diverse enough to detect these potentially important heterogeneous effects. There's also, if we're gonna try to understand these causal mechanisms, often from an empirical standpoint, you need to be able to measure kind of proxies for these important concepts. So, kind of a particularly important one is women's economic empowerment itself. It's kind of, we talked about conceptually what that means, but it's much harder to think about, kind of what questions you would ask a woman to try to determine if she is economically empowered. So that's a challenge in this area. And then we've also thought some about their kind of so-called downstream effects of women's economic empowerment. So once a woman becomes more empowered, we think that probably affects relationship within her households, investment in her children's human capital, and we've identified that that's an important evidence gap as well. So what happens if our goal is to economically empower women? What happens once that happens? So I'll just conclude by summarizing a table from our white paper, which is kind of these different mechanisms, the kind of status of the evidence on each of these channels, and kind of highlighting some that are kind of high priority within the WEE-DiFine initiative. So we think that this idea of privacy of information is, we don't have that much evidence, but what we have is quite promising that it could be an important source of women's economic empowerment. Several other mechanisms, namely opportunity cost of time, support network and transfers, and transaction cost, there is evidence that, that they could have quite positive effects on participants overall, but there's little evidence of gender difference. And as I argued earlier, it's quite possible that many of these aspects of digital financial services will indeed affect women differently. So it's an important kind of empirical need to estimate the gender differentiated impacts of these things. And then there's some kind of further mechanisms that are kind of even less explored. So things like behavioral influence, behavioral factors, or the possibility that I mentioned earlier that digital financial services can reduce systematic discrimination. It's possible, but it's not really been empirically explored. Safety, physical safety, is another avenue that we think is kind of quite promising and would like to see more evidence on. They're also to think about labor supply, and does access to digital financial services increase women's labor supply? I think that kind of the evidence is generally positive, but there are kind of its own set of mechanisms there. Is the linking of digital financial services to women's labor supply? Is it most importantly a credit story? Is it an opportunity cost of time story? So kind of further fleshing out those mechanisms will again help on this, this design front, to help design digital financial services in a way that really fosters women's economic empowerment. So that's those are kind of the most important things that we kind of highlight in the white paper that we've written so far. I now want to hand over to Munshi to talk about the WEE-DiFine initiative more specifically.
Thank you, Rachel. I hope everyone can hear me. So let me start by saying it may sound like we are hoping digital finance services is like a silver bullet to solve all problems. That's not the case. Although I like these digital stuff, we're doing webinars, that's the norm these days. But I also miss the sort of human touch, seeing people, reading expressions and all of that. So this just to say, we also want to know if there are sort of downside effects, unintended consequences. So those are also of equal importance to us. Thanks, Rachel, for taking care of the hard part of explaining the whole white paper. So my job is relatively easy. So on the next slide, basically the purpose of WEE-DiFine has already been said. Rachel, I think you're probably controlling the slide. There you go. Helps me to stay online, what I'm going to say. So yes, I won't sort of repeat everything that has been said about the white paper, and Wahedur also mentioned the background of why this WEE-DiFine initiative has come about. But just to highlight a couple of points. One is the conceptual framework that we have tried to come up with. We hope that you find it useful. In the white paper, we tried to follow this framework to see in particular mechanisms, what sort of evidence is there, where are the bigger gaps. So it's not just for this particular initiative, but also sort of people who are working in this space. We hope that you find it useful. We know there is a lot of work going on in this area. There's a lot of excitement. So obviously this white paper will be kind of outdated in a couple of years or maybe in a year. But anyone who's sort of getting into this space, we hope that find it useful to see what are the big questions, what are the sort of general findings so far. So that's just the white paper. But for this initiative, we basically want to contribute as we build evidence around it. One point I wanted to highlight is this initiative is focused on causal mechanisms. If a particular research can come up with a clear policy suggestion for immediate scale up, that's a bonus, possibly a very big bonus. But it's more of a research initiative. So even if a research doesn't have an immediate implication on policy, that's also a priority for the initiative. And in terms of geographical focus, it's South Asia and Sub-Saharan Africa for obvious reasons. A little bit more about the initiative on the next slide. There are 3 different windows. So the first one is the bigger one, the experimental or extension windows, where you can think of 3 broad areas of questions following the conceptual framework that Rachel explained. So one is to try and unpack specific mechanisms of sort of changes within the technology-induced changes. By that we mean, like, as you bring in DFS, that has some changes embedded in it, and we want to know how that sort of differs between men and women and results in difference in women's economic empowerment. So privacy or safety. If it's a sort of research that can drill down into these very specific elements that are really of interest to us, but we also understand that sometimes it can be very tricky. For example, if it's mobile money, that comes with a whole host of differences. It differs in terms of privacy vis-a-vis cash, differs in terms of safety. So a number of differences come together. Now, unpacking that is possible, and I see many clever academics are here. So if you have sort of interesting ways, clever ways to unpacking these differences, those are really exciting for us. But at the same time, we also want to see, want to contribute in the knowledge generation of how DFS can be used for expanding sort of non-financial services. So any innovation there can be really interesting to us as well. And thirdly, for the experiment extension, we do not want to think DFS completely distinct from everything else that's going on from economic empowerment interventions. There could be a lot of complementarity. Some research already shows that if there is a sort of employment program and you add on DFS, digital financial services, that gives women more access, that results in greater control for women. So any types of complementarity is also of importance to us. So these are sort of experimental extension. So by experimental and extension, we mean, if it's a sort of greenfield, new experiment, and it could be also an extension to an existing RCT that you might be doing. We are maybe a bit apologetic, but for causal mechanisms, we are kind of implying RCTs. But if you also have strong identification strategies in other ways, using other economic statistical methods, that's also acceptable. On the measurement side, I think the research can be more broader than just DFS. So the issues of enacting preferences and bargaining power, these are, I think, issues relevant for women's economic empowerment in general, women's empowerment in general, because as we saw in the literature, and you are well aware, quite often household level outcomes such as how much is invested for children's education and food, nutrition are taken as proxy for women's empowerment. But we also know, well, these are sort of good proxies, but this is not essentially women's empowerment. And it doesn't tell us whether it's bargaining power or sort of they're being able to enact their preferences one another. So any innovation there to distinguish these could be really interesting, not just for WEE-DiFine, but overall women's empowerment research. Value of access versus digitalization, that's also sort of explained. Social norm, another big area for measurement innovations. From the white paper, as we saw, there is a lot of evidence at the household level. And we believe some of those data could potentially be used to look at the gender disaggregated effects, either at the individual level if data permits, or even sort of simplistic male versus female headed households. So such disaggregation of impact analysis using secondary data are also sort of within the area of interest for this initiative. Last, the next slide, those of you who are interested in sort of putting in proposals, obvious question is how much money are we talking about? So these are the sort of ceilings. So for large scale greenfield evaluations, as we call them, it's $500,000. Extensions could be $200,000. And the first RFP is out. We'll put the link on chat. I'm sure you also have it in your inbox, but it doesn't hurt to share again to get the details of the RFP. So the deadline is November 12th, and we encourage you to put in proposals. But we also understand there are quite a few opportunistic research that can be done that doesn't necessarily can wait for an RFP to be open. So these could be things like measurement experiments. If you are doing a research, a survey, and within that you want to embed an experiment, we want to be able to support those as well. So there is also a rolling window where it's smaller pot, but you don't need to wait for an RFP. You just need to wait for a good opportunity for those qualitative methods are also supported under there, as well as pilot studies. Pilot studies are mostly things, if you have a new idea or a prototype of an intervention, you have to sort of do some pilot work before it reaches the stage of an evaluation. Would be interested to support those. So I think that's probably about it with the presentation. So if you have any question, the email address is we_define@bracu.ac.bd. And you can also ask questions now. I think I hand it over back to you, Wahedur.
Thank you, Munshi bhai. So we have a few questions already. So let me ask the question that Jeremiah has a little bit of long question, so bear with me. You mentioned access to credit as an enabler, but there is also evidence that access to credit, particularly high-cost consumer credit that is not intended for productive purposes, can sometimes negatively impact financial health. Is this discussed in the white paper? Rachel or Munshi, either of you can answer.
Munshi.
Okay, sure. Yeah, I think there's some connection issue. So yes, that's a very important point. And actually, I can remember there's one piece of research in Kenya that kind of shows that this indebtedness is happening. So we tried to cover that in the white paper, as much as we could find. But this is not a sort of systematic review, so we may have missed some other sort of more updated findings as well. But on the downside, so the credit is one, but there's also sort of other risks that we have found from sort of consumer protection perspective, it's a really interesting research where it shows that when the transactions are happening over mobile phone, how much is being charged to men versus women. So there is a research that shows that women are more likely to be cheated there. So there are consumer protection risks as well. So it's not all rosy. So we tried to cover those as well that we came across.
Yeah, and the only thing I'll add is that I think there is kind of an interesting set of kind of research and development economics more broadly about kind of, how does kind of credit impact or kind of interact with behavioral factors as far as, kind of, can it lead to actually kind of, having better access to credit? Can it actually make people worse off? And if so, could think that maybe there are gender differentiated impacts of that. So we didn't kind of go into that per se, although I think, you could kind of put that broadly in the area of, kind of that I was talking about, unintended negative consequences, kind of that we do want to be kind of very, very aware of, even if we didn't talk about that one specifically.
Thanks. So we have the question from Bindi. So sure, let me decide what she is asking. We will be hi Munshi and Brac team. Grameen Foundation USA is currently starting up to DFS and WEE projects in Ghana and Eswatini. We will be embedding a baseline assessment and end of project evaluation into the Ghana program. Can you suggest these are questions we might want to include to explore the causal mechanism between DFS and WEE? So Munshi, maybe this is a question for you. You're mute. Munshi, you're mute.
I hope you can hear me now.
Yeah.
Right. Thanks, Bindi. Good to see you. Yes, I mean, in the white paper, actually, you'll see we have discussed the findings, but every section sort of ends with a whole bunch of questions, and that we thought sort of immediate priority questions, but one can sort of break those questions down further for finer details. So that would be one area to look at, but I'm sure this initiative sort of will be keen to sort of see if there are sort of complementarities between the work that you mentioned in Ghana, for this was as well.
I think there is another question from Astrid. I would be interested to know more about this study you just mentioned, the women being overcharged versus men in mobile money operations. Could you share a link? I think it's Rachel or Munshi.
Hi, so I just put link to this initiative. So no, I think I'll put the link. I'm putting the link as we speak for everyone, where you can find the white paper as well as RFP details. So I'm kind of forgetting the country. It's probably Benin, but the experiment that was done is basically they had mystery shoppers, male and female, and they went to vendors, male and female, and to do sort of financial transaction over mobile money. And and the outcome they were looking at is how much they are likely to be overcharged. And the interesting findings there was both men and women vendors charge women more, but women vendors are more likely they overcharge women more than men do. So that's kind of an interesting piece. It's very important from consumer protection perspective. May not have a sort of direct linkage with women's economic empowerment as such, but it can do actually. So I can also send you the link to the title of the paper later on.
And a related question for Rachel, it was, could you say more about the increased bargaining power piece, or maybe an example?
Yeah, absolutely. And I guess what I'll say is, the example will be kind of primarily theoretical, because that's kind of, the whole point of kind of this initiative is to, we have some pretty good theory to that links digital financial services and women's economic empowerment, but the empirical evidence is behind that. But so to kind of flesh out that theory a little bit more, so let's say that it's an area where some amount of capital is kind of required to start a small business, and pre-digital financial services that was kind of only available in formal kind of a physical bank that had limited hours and or was far away. So the digital financial services could, kind of better allow a woman to get access to credit, both through the, kind of opportunity cost of time and getting to the bank, possibly, reduce discrimination, as we mentioned, or kind of other factors. But, once the woman gets that loan, if she starts a business, then, we have both kind of good theory and kind of empirical evidence from other settings that aren't specific to digital financial services that kind of the better job opportunities a woman has, the more economically empowered she is. And that kind of, in the context of classic bargaining models, the kind of channel there is that, if you have this thriving business or job opportunity, even if you don't actually, kind of leave a marriage or a household, it still kind of helps a woman to bargain for better outcomes, kind of within that household. By kind of having that threat to leave, other household members have to treat her better because, they know she actually could leave, and kind of having this, kind of thriving business, which was, at least theoretically, there's theoretical reason to believe it was enabled through digital financial services. That would be the channel there that raised her bargaining power.
Thanks, Rachel. We have a follow-up question from Bindi. Can you also expand on what you mean by marginal value of DFS in non-financial services and value of access versus digitalization? Munshi, do you want to respond to this?
Sure. So I think the second one is a little bit maybe theoretical and less, but actually it's possible to sort of differentiate as well. By marginal value of DFS on non-financial services, what we mean is, let's say if you're doing a mobile phone-based, mobile money-based DFS, that implies that women will have more access to mobile phones. Now, one can use the mobile phone to expand non-financial services, and that can go from any sort of simple things from helping them with budgeting to any social messaging, etc. So any non-financial service that can be tagged on to these digital platforms and foster with the potential of influencing women's economic empowerment is what we mean by this marginal value of DFS in non-financial services. On the value of access versus digitalization, it's difficult to sort of conceptualize, because when it's basically saying that let's say you can give loan in cash, now you can give loan in over mobile money. Now, mobile money helps to give loan to more people, so that allows expanding access to credit. Now, if mobile money is only the vehicle to provide the credit access, then we know the financial inclusion, what happens to women's economic empowerment, etc. Whereas when you do that, you inherently introduce digital features there. So any way, if you can distinguish between these two elements of A, giving credit, B, giving credit with digital money that has additional features. So it's difficult to conceptualize as example, but for measurement perspective, it's probably simpler that, let's say, if you have a credit expansion program, you give credit to women who do not currently have access to credit, either as cash or as mobile money, and you have a control group, and then you see whether the second treatment have any additional effect on women's economic empowerment.
Thank you. We have one question from Rafid. So let me read the question first. Successful DFS at root level will require a level of digital infrastructure, primarily access to electricity and internet, that can successfully reach a critical percentage of women. Usually they are the last people on the household to be given access to such amenities. What is the prerequisite level of infrastructure to reach enough households?
So I'm happy to start out, and then Munshi, you can chime in. I mean, I think kind of the easiest and shortest answer is that, you know, I don't think, you know, that's well known yet, and that's, you know, kind of the example of kind of a question that we could answer with this, or, you know, that we'd like to see get answers with this initiative. So I think that you know, you could think of a study that really kind of gets at different design elements that, you know, kind of, you know, thinks about ways around things like, you know, lack of internet, that tries to kind of see if that's a way to make access more gender equitable.
We lost Rachel. Munshi, do you want to take a stab at this question?
Yes, I mean, so I think what Rachel was saying, and I have the sort of same opinion, is that sort of these are contextual factors, and obviously the existing difference of infrastructure, or more importantly, maybe differences in digital literacy, will obviously have effect on women's economic empowerment if we do, let's say, an universal access to mobile money for everyone who has mobile phone. So I think that's one of the reasons why the research is interested in the causal mechanisms, so that we understand how a particular intervention results in a difference in different outcomes, be it the context being digital infrastructure or anything else, so that the findings can give us a more generalizable sort of narrative. But in terms of the research initiative, you know, those contexts are quite often just given, and we'll have to sort of see a particular intervention, how it changes this way or that way. Whereas, I mean, it might be possible that, you know, major initiatives that has sort of resources for working on infrastructure level, that's fantastic if you can sort of partner up you know, to sort of see how those contextual differences results in different outcomes. That's obviously, you know, that's ambitious, but it would be great if that can happen.
just wanted to make sure that everyone knows the white paper is already available for public access on BIGD website. So is the RFP.
Well, if I may interject, so there's one
Yes.
question from Abu Shanchai about, which is related to RFP, but doesn't hurt to talk about it right away. So one big challenge for DFS related studies is the partnership with the providers. Would this initiative help to build ties with the partners? I think the short answer is yes, but maybe Waheed, you can give more details.
Yeah, so the short answer is that we will try to build, we will try to help, but currently we are not providing any extensive support in terms of making researchers with building there's not extensive support for building this relationship. But if it's within our network where we can be of help, we would certainly like to help researchers out. And then Sanjay also wanted to also ask about the IRB procedure. So the RFP, the process expects that the researchers and their local partners, if there are any, would be take care of the IRB procedures. So that was all the questions we had. So I think this is it for today. Thanks everyone for joining. As I say, that we will have another webinar, our second webinar next week on the RFP. It's scheduled on Tuesday of next week, I think, which is the 20th. And we will be sending out links to the register for that webinar. And we hope all of you will join on that webinar with us. So thanks for today. Bye-bye.